Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the 5 top growth stocks that professional hedge funds and smart money are buying right now in large volumes. For more videos just like this one on the best stocks to buy right now, remember to go and annihilate that like button, subscribe if you are new, comment down below your favorite stock that you are buying right now, and without further ado, let's jump right into today's stories. Our first pick is going to be Advanced Micro Devices Inc., ticker symbol AMD. This company currently trades at $80 per share, while investors think that this company could fall to around $67 on the low end, while other bullish positive investors and experts and professionals believe this company could surge up to $200 just over the next 12 months. Currently, around 89 hedge funds own this company, making it one of the best companies to buy right now according to Smart Money. AMD is one of the favorites for elite hedge fund managers to buy because not only does this company have amazing growth, but their technology is expected to bloom over the long term. Shares recently gained after the company posted their quarterly earnings results, but not necessarily because the results themselves were positive, but because of their future expectations. They said that in their first quarter earnings report, they expect that their revenues will be between $5 billion to $5.6 billion. However, that would only equate to a 10% decline year over year. So clearly investors and hedge funds aren't looking at the short term of this company because their management said that they expect their data center and embedded systems business to remain strong and for that to grow very lucratively over the future. So in the short term, we could see the share price drop lower, but over the long term, that $200 price target is clearly intact to where smart money is investing very heavily into this company to where the volume was around 62 million for this company. The next company we're going to talk about is Apple, ticker symbol AAPL, which currently trades at $150 per share. On the lower end, investors believe that this company, if negative macroeconomic headwinds take over and continuously persist, it could drop as low as $118. On the other hand, we have positive investors in smart money, which believe this company could attain a $210 price target at the end of the year. Currently, 140 hedge funds own this company to where they are hedging their bets on the future growth trajectory of this company. Apple Inc., ticker symbol AAPL, are currently in the limelight because the company posted very positive Q1 results. However, analysts and professionals, as well as smart money hedge fund investors, believe that Apple is going to gain several tailwinds, which is good news throughout the year of 2023, thus igniting the share price to skyrocket to around $210 per share. Times Square Capital even made the following comment about Apple stock, and they said, Apple Inc., ticker symbol AAPL, designs and manufactures smartphones, personal computers, tablets, and wearable devices. The company reported better than expected revenues, though that came from a lower than expected supply chain impact. Apple called out pockets of weakness in wearables as well as home and accessories. Management referenced macroeconomic uncertainty and sounded somewhat guarded when commenting on fourth quarter expectations. In September, Apple introduced 4 new iPhones with retail prices kept at last year's levels. Its shares edged forward by 1% in consideration of these developments. We trimmed the position after evaluating the channel, which highlighted some consumer demand choppiness. So essentially, they are lowering their overall exposure to Apple during the short term because they believe headwinds regarding to supply chain issues will persist until this company achieves various tailwinds throughout the year of 2023. I, on the other hand, am not into buying and trading this company. I would rather just buy and hold this company, so I am already invested into this company and I don't have to time the market once those tailwinds send the share price higher. Next, we have Alphabet Inc., ticker symbol GOOG, and Alphabet is the parent company to both Google as well as YouTube. Currently, around 156 hedge funds in this database own this company, to where this stock is worth $95 per share. On the lower end, even bearish investors believe this company is undervalued right now because the current share price is lower than the lowest price prediction, coming in at $115, while other more positive analysts believe this company could skyrocket up to $135 throughout the next year. Professionals believe that Alphabet's GOOG stock is in a very strong position to counter OpenAI's ChatGPT. And the company also revealed a ChatGPT competitor named Bard. So hopefully they want to steal away market share from Microsoft, who is currently funding OpenAI and ChatGPT. So Google is now responding with their own AI chatbot, which is going to help out with various search engines called Bard. So let's see what this actually is going to implement in the future, and the AI race for artificial intelligence, or rather the best artificial intelligence technology, has begun. On top of that, we also got some comments from Stewart Asset Management, who said this about Alphabet, and I quote, "We invest in businesses with strong, resilient earnings growth, which are less cyclical. In the pandemic recession of 2020, the aggregate earnings of the portfolios we manage did not decline year over year, and in fact grew, albeit modestly. Looking at the Great Recession, which began at year-end 2007 and lasted to mid-year 2009, is helpful too. Our 4 largest current holdings in the portfolio weathered that period well. Alphabet, then called Google, reported earnings that doubled from 2007 to 2010. So what this person is saying is that even during times of macroeconomic uncertainty and even full-on recessions, Alphabet tends to perform extremely well, making this one of the best companies to buy not only in a recessionary environment with high inflation rates and high interest rates, but also one of the best investments overall due to their amazing growth prospects. On top of that, I'm excited to see Microsoft and Google duke it out to see who has the best AI technology. Up next, we have Meta Platforms Inc., ticker symbol META. And as of right now, according to the database, close to 177 hedge funds and smart money own this company. The current share price of Meta is $175, while negative bearish investors believe the company could fall to $80 if macroeconomic headwinds get worse, or very positive investors who are very bullish believe this company could surge as high as $392 over the next 12 months. Meta Platforms is essentially a company that owns many apps and various social media platforms where they get the majority of their revenue from advertising. And shares of Meta were absolutely devastated in the year of 2022, considering that the majority of technology and growth companies were hit very hard, but particularly Meta was hit hard because macroeconomic headwinds negatively impacted their advertising market, thus lowering their overall financials. However, recently, Meta has started to turn things around, where they posted a very upbeat quarter showing amazing financial results and how customers are flocking back to their various platforms, including Facebook. A professional even commented on Meta Platforms by saying, "Even if sector weightings explain most of our underperformance, I made some dubious decisions during the year. Most notably, I added to our holding in Meta Platforms Inc., ticker symbol META, which declined 64% for the year. Meta began the year as a 4.3% weighting and ended as a 2.5% weighting despite our incremental purchases." So essentially, when the share price of Meta fell, it lowered this fund manager's overall allocation to the company, allowing him to buy more at an even cheaper price, thus lowering his overall risk of losses while maintaining his risk management policies, making Meta Platforms a great growth stock to grow through the coming years. And many professionals believe this company could be worth close to $400 by the end of 2023, making it one of the best growth stocks to buy right now. Last but not least, we have Amazon.com, ticker symbol AMZN, which trades for just $97. Currently, about 269 hedge funds own this company, and smart money is flocking to Amazon right now, considering that they're trading very close to their low-end price target from investors of just $90. But the majority of professionals and experts in this space believe the company is worth closer to $232 per share, and that's where I personally gravitate toward. Amazon.com recently posted mixed quarterly results. However, experts are very bullish on Amazon.com's long-term growth prospects. Recently, an expert from Morgan Stanley said that the headwinds for Amazon are transitionary, meaning that the headwinds for this company, which is keeping the stock price back from surging as high as $232, is going to be short-lived. Eventually, these macroeconomic headwinds will subside, causing a giant surge in the overall share price of this phenomenal growth company. That's why this Morgan Stanley professional maintained an outperform rating, and he also said that Amazon.com, ticker symbol AMZN, is one of his top picks for the year of 2023. I also want to add that a professional from RGA Investment Advisors had the following comment about Amazon, saying that the silver lining for a company like Amazon is, although they did not immediately grow into the substantial investments, they likely will do so over the coming years. Time will be the necessary condition to ease these investments that today are pressuring the margins of so many companies, including some in our portfolios, end quote. So essentially, he's saying that the investments that Amazon has been making during this very volatile time in the stock market will pay major dividends in the future, causing the overall share price to increase in value very dramatically. On top of this, all of the companies on this list are extremely safe investments. Not only will they fortify your portfolio against negative macroeconomic headwinds and even a recession, it also makes your portfolio very resilient while giving it the overall runway it needs to grow over time. And just over the next 12 months, if you don't want to wait that long, these companies could all surge by doubling or even tripling in their overall share price. So I would love to hear your thoughts down below about your favorite pick from this list. What's a company that I left out that you would like to be on this list? Remember to go and annihilate that like button if you made it all the way to the end of the video. And if you've already hit the like button, don't forget to comment your thoughts down below and subscribe. And with that being said, I will see you in the next YT video.